Hello students, this is Dr. Mercado once again, and we are continuing covering Chapter 3, the adjusting process. In this particular lecture, we are going to be covering problem 3.4A, and this is Accounting 2401, Principles of Financial Accounting. Okay, so I want to just reiterate the importance of making sure that you read the chapter before you begin any of your assignments. Okay, this is the adjusting process. We are learning to make adjusting entries. There are a lot of examples provided to you in your textbook, okay, on your ebook. Okay, so please make sure that you refer to those examples, that you read the chapter maybe twice so you can understand the content. That way you can become familiar, and as you're preparing these adjusting entries, they make sense to you. Okay, now in this particular chapter, we are learning about the necessary items that need to be adjusted for every end of month, okay, or every end of period, depending on the business that you work for. All of the businesses that I've worked for in the past, we do our closing process basically every end of month. So every end of month we have to make adjustments. Okay, so it is very important that we learn how to make these adjustments, because if we fail to make adjustments, they impact the information presented in your financial statements. Okay, so if we forget to record revenue that has been earned, okay, we are not recording the proper net income. Okay, if we record expenses, the same thing. If you had unearned revenues that now you've earned, you're understating your revenues for the period. Okay, so it's very important that all of the necessary adjustments happen so you can be able to create financial statements that are correct. Okay, based on all of the activities that the organization has done for that specific period. Okay, so making adjusting entries is very, very important, and it usually entails the same things. We are looking at recording adjusting entries for our accrued revenues, our accrued expenses, our unearned revenues, our prepaid expenses, and our depreciation. So once you begin working in the field of accounting, and you have to prepare these entries every end of month, you'll become used to them, and it'll become like just standard procedure. It's just a matter of reviewing all of the documentation, all of the different resources, the different transactions that have happened during the month, and that the necessary entries are recorded. I used to work for a $2.3 billion company, and recording adjusting entries was very important, especially when we were getting audited. Auditors would look heavily at our adjusting entries, our end of month adjusting entries, to make sure that we had accounted for everything that needed to be accounted for, because if we didn't, then that would impact our financial statements, and then that of course would impact our stakeholders. Okay, so it's very important that we clearly understand why we're doing these adjusting entries and how to prepare these adjusting entries. Okay, so after the adjusting entries have been posted, we prepare an adjusted trial balance, which is basically your trial balance after all of the end of month adjusting entries that were prepared. Okay, and basically the adjusted trial balance verifies the quality of the total debits and credits before the financial statements are prepared. So if the adjusted trial balance does not balance, of course we know this, an error has occurred. We have to go back, figure out what happened, and make the correction. Okay? Remember that even though our trial balance is in balance, we might not identify all of our errors. Sometimes our amounts are correct. It's just that we use an incorrect account. Maybe we transpose the number, instead of it being, $500, we do it for $50, both the debit and the credit. So that won't affect the quality of our trial balance, but there's a potential risk that some errors can occur. But the trial balance still shows us that our debits and credits are in balance. So that's a good indicator that, we are in balance, and we can move forward with preparing our financial statements. Okay, so please read the chapter, review the different entries that are needed for the adjusting process. If you refer to Exhibit 6 on your ebook, it's a summary of adjustments. It's a wonderful thing that you need to go back and refer to, because it shows you all of the necessary adjustments that happen every end of month, and the adjusting entry that needs to be recorded. Okay, so that's a very good tool to utilize when you are preparing your adjusting entry. So it's something you can have on your side. That way you are analyzing. First is we need to learn how to analyze what is it that is provided to us, the information provided, and then what is it that we need to do on our end. Okay. So problem 3-4A deals with adjusting entries. So it says Goodnote Company specializes in the repair of music equipment and is owned and operated by Robin. On June the 30th, at the end of the current year, the accountant for Goodnote prepared the following trial balance. So we have the unadjusted trial balance. These is our beginning balances in our accounts before any adjustments have been made. Okay, so this is what we start off with. Then we had some adjustments that occurred during the period, and then the accountant prepared the adjusted trial balance. This is the balance after adjustments. Okay, so unadjusted is before adjustments, adjusted is after adjustments. Okay, so we are being asked to journalize the 7 entries that adjusted the accounts at June the 30th. None of the accounts were affected by more than one adjusting entry. Okay, so we're going to have to review the trial balance, analyze it, and figure out from the trial balance, okay, what adjustments occurred that we have to record on our books. Remember, unless we record that adjusting entry in our general journal, nothing happens. We have to record it in our journal, and then from a journal it gets transferred over to our specific ledgers. Okay, so it's very important that we journalize all of our adjusting entries. Okay, so just let's get started. What we're going to do, the tactic that we're going to utilize is we're going to go through every account. If the account balance from the unadjusted balance and the adjusted balance stays the same, that means there was no adjustment done. Okay, so we don't have to worry about it. If the balance from the unadjusted trial balance differs from the adjusted trial balance, then that means an adjustment was made and we have to record that adjustment. Okay, so we would have to figure out what kind of an adjustment it is. Okay, so let's begin. Cash stayed the same, so we're not going to worry about cash. Accounts receivable stayed the same, 89.5. That we don't have to worry about. Let's look at supplies. Supply says that we started off, let's get our magical calculators out, okay? So, supply says that we started with 11,250 and we ended up with a balance of 2,400. So what does that mean? That means that during the period of June, we used up $8,850 of supplies. So our supplies balance decreased from 11,250 to 2,400. Okay, and I'm going to do a T account over here just to show you. Okay, this is what I want you to do when you're preparing these adjustments. Okay, what is it that we're doing? Okay, and let me just delete this. Okay, so we have the supplies account. Okay, so the supplies account says that we started with 11,250. Remember, we need to know the normal balances of our accounts. Supplies is an asset. The normal balance is unadjusted balance. Okay, so this is my unadjusted balance. Okay, 11,250. Now my adjusted balance is 2,400. That's my ending balance. That's my adjusted balance. Okay. So I started off with 11,250. I ended up with 2,400. Now the balance for supplies should always be on the debit side because, like I stated, it's an asset. The normal balance of an asset is a debit. So it's very important that we know our normal balances of the accounts. So now we needed to figure out how much supplies had been used. So that's where we got the 11,250 that we started off with. I subtracted the 2,400 that I ended up with. So that means that I used up 8,850. Okay, this is your adjusting entry. Okay, this is the amount of the adjustment. Okay, so now we used supplies. Okay, so supplies would have to get credited for 8,850. Now what would we need to debit? Okay, if you use up your supplies, what account would you debit? If you used up your supplies, you would always debit an expense account. So let's look down here at the supplies expense account. Okay, supplies expense had a beginning balance of 0. Okay, so let's look at supplies expense. Okay, so the unadjusted balance was 0. Okay, and then if we look at supplies expense, let's focus only on supplies expense for now. That way we can see it. Supplies expense right here. Okay, no fill. Let's do it red. Okay, so supplies expense, we started off with 0, and now we have a debit balance of $88.50. So my adjusted balance is $88.50. Supplies expense is an expense account. The normal balance of all expense accounts are debits. So for supplies accounts, the normal balance should be a debit. Okay, so if I start off with 0 and now I have $88.50 as a debit, what does that mean? That means, let me cut this and put it down here. That means that I should, let me put a bottom border. Okay, that means that I should have recorded a debit of $88.50 on my account. Okay, this is the amount of your adjustment. Okay, so in this particular case, we started off supplies expense. Let me just make a little adjustment here. Here we go. Supplies expense started off with $0. If we look here, $0 unadjusted balance. And then we had our adjusted balance of $88.50. So what does that mean? If I went from 0 to $88.50, that means that I must have posted an adjustment of a debit for $88.50. Okay, 0 plus $88.50 gives me my ending balance of $88.50. So what do I have here? I have a debit to my supplies expense for $88.50. I've got a credit to my supplies for $88.50. Okay, so we've got the adjusting entry there. Okay, so we're doing these adjustments as of June the 30th. Okay, so what happens? My supplies expense gets debited. Remember, debits always go first. And then my supplies account gets credited $88.50. Okay, and then we can put here a description: supplies used, and then it's $11,250 minus $2,400. So that is what happened. That takes care, okay, of my supplies and my supplies expense. Those two accounts that had a different balance are not now taken care of. Okay, so we've already recorded the entry for supplies and the entry for supplies expense. That takes care of those two adjusting entries. Okay, now we continue. Let's look at prepaid insurance. Prepaid insurance had $14,250 to start off with, and then we ended up with $3,850. So what does that mean? That means that I used up some of that insurance, okay, during the period. It's been used up. Now, if you use up something, what do we have to offset it against? An expense account. So we're talking about insurance. Let's look at the dollar amount first. So it's $14,250. And I'm going to subtract $38.50. That means that I used up $10,400 of insurance, prepaid insurance, okay? Now let's look at our insurance expense down here, okay? Let's highlight the two that we're doing right now. We're doing prepaid . So prepaid insurance, and we're doing insurance expense. Insurance expense, okay? So we said that my insurance went from $14,250 to $38.50. That means that I used up $10,400 in insurance. So my insurance decreased, so that means that my prepaid insurance is going to decrease. Okay, we're basically doing the same thing. I'm going to do this one more time with you just so you can see, and then we can take it from there. But now we're going to be doing prepaid insurance. So prepaid insurance had an adjusted balance of $14,250. We ended up with a balance of $38.50. So we need to figure out how much we used. So we had already figured out that we had used $14,250 minus $38.50. We used up $10,400. Okay. We have to record an entry to record that insurance that was used up during the period. Now we need to offset it, and we're going to offset it against the expense, insurance expense. Let's look at our insurance expense. Insurance expense started off with 0. Okay. My ending balance was $10,400. Okay. So what does that mean? That means that my insurance expense didn't have a balance before this period, but then it ended up with $10,400. So my insurance expense increased by $10,400. How do I increase it? By making an adjustment, a debit adjustment of $10,400. So I've got a debit to my insurance expense for $10,400. I've got a credit to my prepaid insurance for $10,400. Okay. So insurance expense gets debited. Remember, debits always go first. And then we have prepaid insurance of $10,400 credit. Okay. And this is the insurance expired during the period. That'll be $14,250 minus $38.50. Okay. So that is my second adjustment. Okay. So that we've already taken care of supplies, prepaid insurance, supplies expense, and insurance expense. Okay. Let's look at equipment. Equipment does not change. Let's look at accumulated depreciation for the equipment. Okay. Accumulated depreciation is a contra asset account. Okay. It basically is reported right below the asset account. So if I wanted to figure out the book value of my equipment, what I would basically have to do is get the value that we have in our books for the equipment, which is $290,450, and I'm going to subtract the accumulated depreciation of $94,500. That would give me a book value of $195,950. That is how much the asset is in our books for after depreciation. Okay, so of course, every month we use up our equipment. So every month it basically loses value because it's being used up. So my accumulated depreciation was $94,500. Now it's $106,100. So how much did we depreciate our equipment this month? $94,500 minus $106,100. We depreciated our equipment by $11,600. Okay. So the normal balance of my accumulated depreciation account is a credit. If you notice, the account went from $94,500 to $106,100. So in order for my balance to increase, I know that I needed to have credited my account $11,600. So if I do $94,500 plus another credit, okay, of $11,600, that would give me my $106,100. So I know I need to make an adjustment for $11,600, and that is going to be a credit. Okay, so I'm going to stop doing T accounts because that just takes too much of my time. But you get the logistics here. You can continue doing T accounts on your end. Now I'm just going to calculate based on the information provided. So $94,500. And remember, what did I do? I subtracted $94,500 minus $106,100. That gave me the amount of the adjustment, and it's a minus. I need to credit my account $11,600. Okay. So I know I need to credit my account. Debits go first. I'm going to leave that blank. So I'm going to go ahead and I'm going to put the credit here. Accumulated depreciation for the equipment, and it's a credit of 11,600. Okay, now what is going to be my offset? Okay, what am I going to offset that again? So we're looking at accumulated depreciation. That went from 94,500 to 106,100. Okay, so I've got accumulated depreciation. If we go down, we have depreciation expense for the equipment. Okay, remember we have one depreciation account for each type of account. So we have equipment and automobiles. So we're focusing on the equipment one. So let's look at the equipment one. Okay. So in this particular account for this period, we started off with 0 and we ended up with 11,600 debit. Okay, so my balance went from 0 to a debit of 11,600. So what does that mean? That means that this account, depreciation expense equipment, got debited, and look, let's look at the account. It got debited 11,600. So my depreciation expense account, depreciation expense for the equipment got debited 11,600. Okay, equipment depreciation, and then we're gonna get the 106,100, which was our ending balance, minus our beginning balance of 94,500. Okay, so that takes care of my depreciation for the equipment. Let's look at automobiles. Automobiles stayed the same. Okay, now let's look at the accumulated depreciation for automobiles. I started off with 54,750. I ended up with 62,050. So we depreciated our automobiles as well. And let me select this one. So we started off with 54,750, a credit balance of 54,750, and now I have a balance of 62,050. So that means that my balance increased by a credit of $7,300. So I've got a credit of 54,750. Now I've got a credit of 62,050. How do I jump from 54 to 62? I have to credit my account by $7,300. Okay. So this is happening on June the 30th. So we have accumulated depreciation that we need to credit. Okay, so let's put it on the credit side. And this is for automobiles. Okay, so we have a credit of $7,300. Okay. Now let's look at the offset. I should have a depreciation account for my automobiles, which I do down here. Okay, so my depreciation expense for automobiles started off with 0, and now I have a debit balance of 7,300. So if I start off with 0 and now I have a debit of 7,300, that means we must have debited our account by $7,300 to bring the balance up from 0 to 73. So we're going to go ahead and we're going to debit depreciation expense automobiles for $7,300. Okay. And we have 62,050 minus 54,750. Okay, so that is our adjustment for the automobile depreciation. Okay, accounts payable went from 24,930 to 26,130. Remember, accounts payable is a liability account. This is the money that we owe to different vendors. Okay, so we owed 24, now we owe 26. So that means that the amount that we owed increased. Okay, so we've got our accounts payable. Okay, a credit of 24 to a credit of 26. That means that we must have credited the account. Let's see the dollar amount, the specific dollar amount. 24,930 minus 26,130. That gives me a $1,200 difference, okay? So that means that I credited my account by $2,400. So I need to record that credit to bump it up from 24,930 to 26,130. I need to credit the account $1,200, okay? So this is happening as of June the 30th. And this is a credit, so I'm going to go ahead let me first highlight it. That way we know we're working on accounts payable right there. So we're going to have our credit to accounts payable of, okay, 1,200. Okay. So this means that we accrued for something that we had not paid. Okay. So there was maybe a bill that came in that we didn't have time to pay it, but it's for this specific period that we are on. Therefore, we need to account for it. So what do? We set money aside on our payable. That way we know that we looked at our transactions and we put money aside to pay that bill next month. But the expense is going to be recorded in the correct period. So now we need to figure out what expense happened that we recorded as a liability. Okay, so let's look at our expense section. Okay, so let's look at utilities expense. Okay, utilities expense. Well, let's look at salaries. Okay, salaries would not be impacted because we have an account specific for salaries. We have a salaries payable account. So we'll look at that in a bit because there was an entry for that. Okay, so salaries we don't look at because this does not pertain to salaries. Okay, rent stayed the same, so we don't have to worry about rent. We've already used up supplies expense, depreciation expense equipment, depreciation expense automobiles, so we're not going to use any of those. Now let's look at your utilities. Utilities expense, you had a balance of $12,900 and then it went up to $14,100. So that means that your utilities expense increased by $1,200. Okay, voila. That $1,200 is the same amount as your accounts payable increase. Okay, so what does that tell me? That tells me that I received a utilities bill, okay, for $1,200, and that it's the end of the month and we have not paid this utility bill, and we're not going to pay it this month. But it belongs to something that happened this month. So I have to put money aside, I have to accrue money to pay this bill next month. Okay, but we don't want to record the expense for the actual utility next month because it happened this month. So we have to record the expense in the appropriate accounting period. So the utilities occurred this month, we got the bill, it's just that we're going to pay it next month. We need to set the money aside, but the expense has to be recorded this period. So because the expense has to be recorded this period, we have to record the transaction to our expense account. Okay, so utilities expense, would have to be debited for $1,200. What that does, that recognizes the expense in the appropriate accounting period, and then we put money aside on our payable, our liability account. That way next month when we cut that check for that utility bill, the money was set aside, but the actual expense was posted in the correct accounting period. Okay, so here we are accruing for utilities expense. And I've got 26,130 minus 24,930, or 14,100 minus 12,900. Whichever calculation you do, it still give you the $1,200. It just depends if you're looking at your accounts payable account or your utilities expense account. Okay, so that takes care of my accrual for my utilities bill. Okay, now let's look at salaries payable. I had a beginning balance of 0. Now I have a credit balance of $8,100. Remember, anytime you see the word payable, it means it's a liability. We owe money. Okay, so let's look at my salaries payable. Okay, so my salaries salaries payable had 0. Okay, it's a liability. My normal balance of a liability is a credit. Okay, so I went from 0 to 8,100 credit. Okay, so what does that mean? That means I must have credited my account. My salaries payable account got credited by 8,100. Okay, so if we go from 0 to a credit of 8,100, that means that this account got posted an adjustment of a credit of $8,100, which is what we have here. Okay, now we need to go look at the offset. Okay, so what is happening here? What's happening here is that we had employees that worked during this period, but they have not gotten paid. Okay, they haven't gotten paid, but they've worked this accounting period, so they've earned the money this period. Okay, so we need to record the expense for the salaries this period. And because we are not going to pay them till next month, we need to put the money aside into our salaries payable account. That way the money is there for when we cut them a check next month. The money is sitting there for the days that they worked in the prior month. Okay? So all we're doing is figuring out how much money do we owe them for this month. This is the actual wages that they've earned in the current month of June that we're going to pay in July. For whatever reason, maybe the cutoff of the days that we pay our employees is a specific date and the end of month falls on another date. We need to make sure that we make an adjustment for those wages earned in that accounting period. Okay, so we've got our salaries payable increasing from 0 to 8,100 credits, so that means my account got credited by 8,100. Now we need to go look at the offset. Okay, now let's look at our salaries account, our salary expense account. Okay, so my salary expense account had a balance of $516,900. Okay, and then now it has a balance of $525. So it increased by $8,100. Okay, so my salary expense had a beginning debit balance of $516,900. It had an ending debit balance of $525. So that means that my salaries expense account increased by a debit for $8,100. So that means that I have to do an entry to my salary expense for $8,100 debit, because that is the amount that my salary expense increased. It went from $516,900 to $525, so it increased by $8,100. Okay, so this is my accrued salary. $525 minus $516,900. Okay, or the amount of your salaries payable of $8,100 minus 0 would give you the $8,100. Okay, so that takes care of my salary expense. Now I'm recognizing the expense in the correct period that it happened. My employees worked in the month of June, so I am recording an expense in the month of June for $8,100, and I am putting the money aside into my salaries payable. This is money that is owed to my employees of $8,100. Okay, next month in July, when I'm going to get ready to pay my employees these $8,100, I basically take the money out of my payable. So I would debit my salaries payable for $8,100 and then cut my employees their check. Okay, so that takes care of that. The next one we have is unearned service fees. Okay, unearned service fees. Okay. So in our unearned service fees, we had a credit balance of $18,000. Now we have a balance of $9,000. My unearned service fee went down from 18 to 9, which is 9,000. Let's get our calculators. 18,000 minus 9,000. That means that my unearned service fees decreased by $9,000. Okay, so from 18,000 to 9,000. Okay, it's a credit and a credit. So how do I get it from a credit balance of 18 to a credit balance of 9? That means in this case, we needed to have debited the account $9,000. So if I debit my account, let's do this entry over here. I'm just going to copy the formatting and then I'll change up everything else. Okay. No fill and no fill. Okay. So let's look at our unearned service fees. Unearned service fees had a credit balance of $18,000. Okay, this is my unadjusted balance. Okay, so I start off with 18,000 credit. Okay, because this is a liability. We owe someone a service. We have not provided the service yet, so we need to provide that service. And we ended up with $9,000. This is my adjusted balance. So if I start off with a credit of 18 and now I ended up with a credit of 9, that means that I must have used up during the period, or I must have earned service fees of $9,000. So this is the amount of my adjustment. Okay. So now what are we going to offset that to? Okay. So they had paid us in advance for, what is it that we do here in this business? We repair some kind of equipment. So they paid us in advance to repair equipment. We have not earned that money because we haven't repaired the equipment yet. We got paid in advance. You know what? During the month, we earned $9,000 of those $18,000. We worked and we fixed some equipment, and now we can say we've earned the money. So we have to acknowledge that some revenue has been generated this month because we provided a service. Okay, so my unearned service fee is going to get debited, and now let's look at my service fees earned. Okay, right here. So my service fees, this is your revenue. This is the money that you generate off of your business. You started off with $733,800. And you ended up with $742,800. So your revenues increased by $9,000. Okay, $9,000. So service fees earned. This is a revenue account. The normal balance of a revenue account is a credit. Look at the credit balance. So I started off with $733,800. This is my unadjusted balance. I ended up with $742,800. This is my adjusted balance. So how much is the amount of my adjustment? Okay. So if I went from $733,800 to $742,000, that means that I must have credited my account $9,000. This is my adjustment. Okay. So $733,800 plus a $9,000 credit will give me my adjusted balance of $742,800. Okay. So what happened here? My unearned service fees needs to be adjusted because now I have earned those fees. So I would debit my account for that $9,000. Okay. And then what happened? I earned the fees. So service fees earned. Now I can record it in my revenue account of $9,000. Okay. And these are service fees earned. So it's $18,900 minus $9,000, or $742,800 minus $733,800. Okay. So my unearned service fees, I had a credit of 18. I ended up with $9,000. So that means that during the period I earned $9,000. Okay, so I need to update the amount of my unearned service fees. That way I can reflect, you know what? I still have $9,000 sitting there. So that means that I need to perform some kind of service to be able to earn those $9,000. So my unearned service fees account keeps track of the amount of money that has been paid in advance, and that you still need to perform a service to be able to earn that money. Once you earn that money, it transfers over to your service fees earned account. This is where we recognize actual fees earned. This is where you worked, you performed a service, and you've earned your money. Okay? So that takes care of my 9,000. I have a debit and a credit for that one. Let's run through the next. Common stock, there's no change. Retained earnings, there is no change. Dividends, there is no change. Rent expense, there is no change. We use utilities expense. Taxes expense, there is no change. And miscellaneous expense, there is no change. So the instruction says that there were 7 entries. Let's make sure that we have 7. 1, 2, 3, 4, 5, 6, 7. Yes, we do. Now, what I like to do is I like to make sure that my debits equal my credits. So I add my debits and then I add my credits just so I can make sure on my end, you know what? I am in balance. My debits equal my credits. Okay? And I just like to do that just so I can make sure that I enter my numbers correctly in my journal. So debits equal credits, 56,450. This is my total for my total adjusting entries. Okay. And I'm good. Okay. If I were not in balance, if my debits would not equal my credits, you would have to go back and figure out why. Okay. So these are an example, a detailed example of how to prepare adjusting entries using a trial balance. An adjusted trial balance is provided, and then the adjusted trial balance is provided. And based on the information, you have to identify the differences in the accounts and figure out what the adjustment entries are so you can record them. Okay? So it can get a little bit complicated. Please make sure that you completely read the chapter, that you look at the different examples provided. There's just a wealth of information. Make sure that as you are completing your journal entries, you refer to Exhibit 6, Summary of Adjustments. It highlights all of the adjustments that would have to occur as well as the journal entries associated with them. Okay? If you all have any questions, concerns, please refer to the course syllabus for my office hours. If you stop by, call me, whatever is it that you need, or you can always send me either a pronto message, a Blackboard message, or an email. Just make sure that you include the problem number that you're working on, your attempted solution, and your specific question or questions, and I will get back with you as soon as possible. Do not be shy. Make sure that you work on your assignments. You have 2 attempts, and I keep the highest grade earned. Okay? So if you don't do well on the first try, you need more practice. Please utilize the second attempt to try to improve your grade and get more practice on it. Okay? So that is basically it for this lecture. Please make sure to complete your homework and your quiz by the established due date, and have a wonderful rest of your week. Thank you.